When Bart approached me and asked me to join a DAT with him, my first response was no. And then he explained how this was going to be different. Okay. And within 2 days, I had to do this.
So concept of a treasury, a corporate treasury is not new, right? There's been corporate treasuries for 40 years. They have revenue in these companies, they derive the extra revenue, and they have these treasuries that are there to support the mission of the firm. In our instance, in the instances kind of these, some of these DATs last year, it's the other way around, right? You get funded with a bunch of assets and you take that revenue and then you're going to try to invest in or buy or create operating businesses.
Today's guests are from AVAT, or Avalanche Treasury Company, CEO Bart Smith and COO Laine Litman. Bart and Laine, welcome on, and thank you for having me in your office.
Thank you.
Yeah, of course. Both of you came from traditional financial backgrounds before moving into digital assets. Bart, you were the CEO of Susquehanna Crypto after working at firms on the firms like ETF Group and Portfolio Sales and Trading. And then Laine, you were the president at Hidden Roads, which was acquired by Ripple. Kind of looking back maybe to start on the evolution of both of your careers, was there a specific moment where you're like, okay, this is worth time being spent and I actually see this as the future opposed to maybe the worlds that you guys originally came from, which was traditional finance?
Yeah, I mean, for me, so getting involved in Bitcoin was kind of an offshoot of the ETF business at Susquehanna. Around the 2013, 2014 timeframe, Cameron and Tyler Winklevoss were trying to list a Bitcoin ETF. They came down. They talked to me and my desk about trying to advocate with the SEC, which we did unsuccessfully. But the firm was long Bitcoin just themselves as early as 2014, and so all of the kind of crypto related stuff at that point was just Bitcoin, was just kind of embedded in our desk, and it was really kind of a hobby, something we were kind of rooting for. But we didn't really think about it too seriously. I mean, there were a lot of people who were like evangelical at that time about it being this like massive shift. And not to say that we didn't think that would happen, but we were just kind of, we were more in love with the idea. And then in 2016, 2017 in particular, like the ICO phase where like all of these other smart contract platforms kind of came out of Bitcoin, there was like this kind of rift in the community that, people like, Vitalik Buterin or Gavin Wood, who were on the Bitcoin Foundation, and they wanted to do smart contract stuff. And there was a bunch of people that just basically said, like, Bitcoin's not that. Bitcoin's digital gold. If you want to do that, you can kind of start your own project. And they did, and then all these other digital assets came in, and there was a tremendous amount of enthusiasm at that point. But then in 2018, it kind of fizzled out. And for the next couple of years, we were still very involved in the digital asset space, but I was still focused a lot on fixed income and ETF trading. And it wasn't until 2021 where kind of you had the DeFi summer and you had like Trader Joe and like SushiSwap and like Uniswap, all these exchanges where there was like tremendous amount of activity. We were kind of like, wow, this is actually really interesting. Coming from traditional finance, like the infrastructure that all of equity and fixed income trading on is like pretty barbaric. I think people would be generally like pretty surprised at how clunky and unreliable it is. And we just kind of, we set up regulations to kind of account for that. And so that was really for me the moment where I was like, okay, I'm actually going to stop doing ETFs. I'm going to stop doing fixed income. The regulatory landscape in the United States wasn't that great. Yeah. So we moved offshore. We started an entity in the Bahamas. We had offices in London and Hong Kong, but our kind of East Coast time hub was in the Bahamas. And that was it. That was like the point to me where I was like, this seems like this is going to be implemented. At that point, like the rally cry of like the institutions are coming had been like 5 years in the making in crypto space. And we didn't really know when they were coming, but we knew that they would eventually. And so that was the impetus for me to kind of go there. And I would say that was like late 21.
Mm-hmm. What about you, Laine?
Well, for me, I started my career sales and trading, and through that I saw the evolution from voice trading to electronic trading. So I'd started to see these changes driven by efficiency, price transparency, and just better operational experiences there. And after, leaving, because I saw the transition to electronic, I joined principal trading firms. And there I saw how principal trading firms entered OTC markets, such as treasury market making and corporate bonds, and made the markets more efficient because they were doing the price discovery with their technology. There was better price transparency. And so once again, you saw this adoption cycle. Yeah. Then, he would talked about the rally cry of institutions are coming to crypto. And when I was at Virtu, I was tasked with starting crypto market making. And despite hearing about the institutions are coming for years at conferences, I found myself kind of with a roadblock. There was no credit intermediation in the space. So, in order to solve for the institutionalization of this asset class is why I went to Hidden Road to hopefully remove that roadblock by, digital prime brokerage. And there, with the Ripple acquisition, I'd started to learn more about blockchain technology. Mm-hmm. And it was the same type of thing. People have talked about the institutions coming for so long. And, we can talk about why that wasn't really happening for a while. But as institutions started to get more organized about their basic needs for infrastructure, no matter what it looked like, and the fact that they couldn't change regulation to change what they needed, as well as solutions such as Avalanche, which is a newer blockchain, coming about and understanding those basic institutional needs. Mm-hmm. I saw that change starting to happen, as well as the actual adoption of it. And so when Bart asked me to join him, and I had another opportunity to work with Rob Haddock from Dragonfly, and I've seen this adoption cycle before, I feel like in that moment, I knew in my gut, now is the time. The institutions are not coming, the institutions are here, and I want to be part of this next transition.
Yeah. It's funny because I had conversations related to things that you both were just talking about. We had Brett Redfern on the podcast, and we were talking about the KKR tokenization of, I believe it was a healthcare fund on Avalanche back in 2022. Yep. And it's kind of okay, 4 years later, wow, look at the evolution. And then we also had Morgan Kapretsky from AvaLabs on the podcast too, who is their VP of on-chain finance, focused on Avalanche, right? So I think we've noticed a lot of this change over the years, and it's no longer theoretical, but to the point that you guys are making is that they are here, right? And so I find that maybe for the listeners too who don't know about Avalanche Treasury Company, what role do you ultimately play here? Because it's not just a DAT model that we've seen historically, right? So what's the differentiating factor here instead of just accruing Avalanche?
Right. Yeah, I think there's been this weird iteration because Michael Saylor was it's just a unique, you can't replicate it. And I think that's, you have this software company, the SaaS company this outside in Tyson's corner of Virginia, and they had $50 million in EBITDA, and he just started buying Bitcoin in 2020, and it rocketed. And then he woke up one day with $40 billion of embedded gains on Bitcoin, and you can't replicate that. And so I think there's a lot of people who were trying to mimic and are trying to mimic get a lot of enthusiasm out there, to make sure people know your ticker, and then they can hopefully sell their stock at a price that is at a premium to the underlying assets, and then you take that cash issuance and you buy more. It's this flywheel. I don't know that is a sustainable business model for a lot of companies. Maybe one per asset tops.
But I don't even think that's what the market needs at this point. People have so many different ways that they can have access to the tokens, or even staking returns on tokens now with some of the ETFs. And so when Bart approached me and asked me to join a DAT with him, my first response was no. And then he explained how this was going to be different. Okay. And within 2 days, I had to do this.
So the concept of a corporate treasury is not new, right? There's been corporate treasuries for 40 years. Apple, Microsoft, Berkshire Hathaway, right? They have revenue in these companies. They derive the extra revenue, and they have these treasuries that are there to support the mission of the firm. In our instance, in the instances kind of some of these DATs last year, it's the other way around, right? You get funded with a bunch of assets and you take that revenue, and then you're going to try to invest in or buy or create operating businesses. And so from our perspective, that is the intermediate long-term goal of AVAT, is that if you just own Ethereum, since 2018, you've done pretty well, but you didn't get exposure to Uniswap or Aave or Tether, you think about like lending protocols and kind of B2B businesses and stable coins, DeFi platforms, all of those gains and successes were held by private investors, right, into hard to access growth equity and venture equity funds. And so what our thought is that you can still own exposure to AVAT. We can stake those, which historically has given us conservatively a 5 to 6% yield in AVAX terms. But then also you have other opportunities to invest in, create, or outright buy some of these other opportunities are going to build on top of the Avalanche ecosystem. So the concept there is to give yourself a more holistic exposure to the growth of the ecosystem and being able to provide that in a regulated brokerage account, that you can have your advisor advise you on it. I think that's one of the blind spots for kind of mass, call it baby boomer, kind of ultra high net worth, is that they haven't been able to access in a way that they're comfortable. Like, my mom is not going to open up a Coinbase account and buy, spot, AVAX. She's just not going to. Yeah. But she can talk to her advisor about if it's appropriate, and they can buy it in a brokerage account and know that it's regulated by the SEC, and it can be part of an overall portfolio. So I think there's a couple of things there. I think that the exposure is better. It meets a lot of investors where they want to be met. Most institutions can't hold spot crypto on their balance sheets, at least easily. And so again, this is just kind of filling some of those gaps with an exposure that we feel like is more appropriate and gives you a better holistic exposure to the ecosystem.
Yeah, and one other thing Bart touched on is, yes, it's to make sure people can get exposure, but it's also this acknowledgement that people haven't been able to invest in technologies, and companies are taking longer to go public. And so some of the wealth generation that people historically had, for me, I like to talk about Amazon when I bought it back in 2007, 2008. And the markets have kind of missed out on some of these adoption cycles and their ability to invest in them. So we're hoping to provide that.
Yeah, Anthropic, SpaceX, like they're all going public at hundreds of billions or trillions of dollars. All of that gain was achieved by private investors, and rank and file investors who invest in public equities have been kind of locked out. Business to business payment, companies like Stripe. Stripe's worth $100 billion. It may never go public. Mm-hmm. So, people have missed out on the growth of those. And so it's a rare opportunity in this vehicle to get exposure to a nascent technology at an early stage in its development. And hopefully, that technology is successful and they can share in that success.
Yeah. When you're having conversations with institutions right now, what would you say they're evaluating when it comes to kind of picking where to allocate capital and other things on like maybe their docket, right? Because to your point, both of your points here is that there is this interest in the market, but a lot of them can't own spot crypto trading. They can't open a Coinbase account, nor do some of them want to, right? But maybe they see the opportunity here on the Avalanche ecosystem and in the market as a whole. So what are the conversations like that you're having with institutions today? And where do you see the most demand, perhaps?
Right, I think the interesting thing about the investment conversations is they almost always quickly pivot into implementation conversations. And so I want to invest in Avalanche, and we kind of explain some of the benefits and kind of our thesis. And then they'll say, well, how would I implement this for my company? Whether I'm an asset management company, or I'm a brokerage, or I'm an exchange, or all the different kind of facets of finance broadly. And the funniest thing about it to me is that if you have someone who's been involved in crypto for a long time, so I'm going back to 2014, and you go to some of these conferences. So there was a conference in Miami that was a big conference a couple weeks ago. A month before that, there was a big one in New York. And you talk to people who are crypto native, and they are so dour. And it's almost bleak sometimes when you talk to them, because price action has been difficult, and it's hard to kind of shake that if you're in the throes every day. And then you go over and talk to someone in a suit from a bank or a brokerage, and they've never been more excited. and it's it's very interesting in having those conversations. So in the implementation side, governments, corporations, they know that there's something there, right? And they understand broadly the benefits of efficiencies and scaling businesses and price efficiencies, and they're just trying to figure out like, how do I implement this? And we walk through the benefits of Avalanche versus other chains. It very quickly becomes, okay, this is actually kind of what I'm looking for. Mm-hmm. And so those conversations have been tremendous. Mm-hmm. And so I think that Clarity Act to me is a really important part of this. I think there's a tremendous amount of activity that's happening in regulated corporate back rooms that's trying to kind of like meet clarity, hopefully this year. And so I think that has been a huge unlock that a lot of these regulated financial institutions are like, okay, there is a path where I'm going to be able to own spot crypto on my balance sheet from an accounting perspective and a regulatory perspective, a technology perspective. So we want to start this now. And that's probably 2/3 of our conversations.
We also are having some conversations with people who did a proof of concept or checked a box to say, say we've done something on blockchain. Yeah. And I think people are now starting to realize what they actually need to fully adopt this technology and the benefits that they can receive from the technology. And so now we're having discussions more around making sure if we actually build on this and fully adopt it, does it cater to the needs of all institutions with regards to regulatory compliance, AML, KYC, some of the basic foundations that are not going away no matter what shiny object you show them. And we've seen some people who even asked those questions and adopted technology that checked those boxes, but now realize with some of those pseudo blockchains that they've hit a little bit of a dead end, and they aren't getting the efficiencies that they can be getting from blockchain. So now they're looking for another solution that still provides them with the security and privacy that everybody needs, but that they have, the optional privacy, the ability to actually connect to a base layer blockchain where they're able to get, actual verifiability, and they don't have to worry about selection bias of who is allowed to see the data and is this actually auditable, and kind of the things that have started to happen.
I think a big thing too is that in the early stages of this, being able to kind of create like a walled garden, which an L1 on an Avalanche would allow you to do, where you can hard code in your compliance, your KYC, your AML. You can also permission people to see it, and so and this is all embedded in the technology. It's not something that you have to kind of build on top like a lot of other chains have tried to kind of catch up with. But the most important thing is, particularly in the early stages, you're not sharing block space with anyone if you don't want to. And I think institutions are very nervous about some totally decentralized chains where there is no privacy, there is no walled garden, and you're in this kind of like infancy and you don't really know what you're supposed to be afraid of, and you're just sharing block space with anonymous people. And that is very unsettling.
I mean, people aren't doing that. They can't do that.
Yes.
And they realize that. But again, some people checked a box, and that seemed like the easiest path. But
so I think those are the best conversations we're having. Like, you can go onto GitHub and download the software for Avalanche, and you can build your own L1 with one software developer in 30 minutes, and it's completely composable. You can. It's totally private, it's a walled garden, and then you have total autonomy at that point. And if you don't tell me that you've done that, I can see that there's one more chain out there, but I don't know it's you. So it actually gives like a tremendous amount of comfort to institutions to say, okay, we're gonna fiddle around with this, and we're gonna come back in a couple weeks and ask you some questions.
Yeah. Maybe building on this then, where are you seeing the most momentum right now in terms of like partnerships, infrastructure build out, and what people actually want to do? And then how are you kind of guiding those conversations?
I was going to say a lot of, again, the smart institutions are past the point of asking, is blockchain real? Does it matter? What do I need to learn about this? And the smartest ones, again, are not just thinking about the next 2 to 3 years of some type of walled garden and that's all I need and I'm stopping here. But they're asking questions about the verifiability down the road or the interoperability, and is the interoperability modular or is it like extremely limiting where you have you're creating fragmentation. And so the people who are really curious about this space and curious about building a long-term infrastructure that they don't have to migrate off of in 5 years is, I'd say, where we're having the best conversations and exploring, whether that's in a financial institution or governments. Yes, governments have come, which I feel like is a sign we are past the early adopters. I love Malcolm Gladwell. So looking back to Tipping Point, which has a lot of references, they talk about, the innovators. We saw that probably late teens. And then we've, at this point, I'd say we're at the end of early adopters. And so you're getting smarter questions, people who want to build for the long term and truly maximize the efficiencies and benefits that they can get over the next 30 plus years.
I would say that there's obviously stablecoins has been like a huge proof point, and then and there's the real world assets on chain, which in many cases in the early stages, I think that's going to be a humongous shift. But I think most of the stuff that's happening right now is early. It's kind of testing stuff. It's not really. It's just moving plumbing around. The thing that I have been pretty surprised at, and if you had asked me at the beginning of the year if I thought that we would be as close to this happening as we are, I would have said pretty confidently no, is the movement towards tokenized securities, like stocks on chain in a regulated world. And then even further down my list would have been the concept of like regulated DeFi, which is kind of an oxymoron, but like the idea of having these decentralized exchanges. And then, there's talks right now, Hype has obviously been crazy in the news for a bunch of different reasons, but they're talking about that they have to bring this under some kind of regulatory purview. And like, that is a humongous shift because, I always make the joke that like, athletes want to be rock stars and rock stars want to be athletes, right? Well, like, and there's like brokerages and exchanges who are vying for this business. And then you have like the crypto native exchanges, Coinbase and Kraken and some of the others that have registered in the US. If right now you have like the Fidelity, Schwab just announced that they're offering Bitcoin, Morgan Stanley's offering spot Bitcoin to their customers. So they're kind of encroaching on Coinbase world. But now if you're in this world where you're going to tokenize securities, and that is not like, it's not like a receipt token, it's like the actual ownership is in that tokenized form. And Robinhood or any of the crypto native Coinbase, they can offer that along with prediction markets and along with other services. And so you have this like massive competition. Their ability to offer, firms like that, ability to offer stocks to investors without having to maintain this massive, expensive infrastructure from like the legacy equity markets that Morgan Stanley and UBS and Merrill Lynch have to do. It is a wild advantage. It is a seismic shift. So that's the thing, and that requires Clarity Act going through. So if you're looking out the next 90 days, like what I'm looking at, it's like I'm watching that very closely because if that happens and if Clarity does go through, that is like a seismic shift for the crypto markets in the next 18 months.
Yeah. I mean, I've said this plenty of times. I'm optimistic that it will go through, and I'm hopeful. And there's a lot of people doing the work on that front. We saw it pass in the Senate Banking Committee, and now it's off to the next stage of everything. But maybe to play devil's advocate, how do you still see opportunity even if it doesn't go through, right? And how are you guys kind of hedging, both sides of the bet?
I think there's a lot of areas in DeFi and stable coins are a massive win that at least they got Genius through, although obviously they're trying to like kind of
always something.
Yeah, well, in Clarity, they're basically trying to like renegotiate some of the terms from Genius, which is frustrating. But there's a lot of other stuff that's happening, and there's the traditional lending markets like the Aves of the world I talked about, and there is RWAs. Particularly in like the private credit space and getting private credit on chain for more transparency. There's tons of things in like rewards and gaming and internationally Avalanche, particularly in the Korean and Japanese markets and Hong Kong markets are like very, very popular, and they're doing a lot of stuff on the ground there vis-a-vis regulation that has been approved in those jurisdictions in Hong Kong and Japan in particular. So like outside the US, there's still a ton, and there's still a lot of things that we were working on before Clarity. I would say that Clarity, to me, is a bigger deal than I think it is to most people. I would call myself hopeful that it passes. I don't know if I'd go as far as to say optimistic. We're on a pretty tight timeline. In fact, Trump administration and Senator Lummis came out, I think, yesterday and said that July 4th is kind of a drop dead date.
That's what I've heard.
And I think I've spent some time in DC.
Fast.
Yeah, I've spent some time in DC in the last month doing some advocacy, and I would find that July 4th to be like probably later than we would need. So anyway, I do think it's a shame. I think there's a lot of work that's going on in regulated corporations, and I think that if we can get this through, even if it's imperfect, some people say a bad bill is worse than no bill. I don't know that I agree with that, but.
Brian Armstrong. Or Brian,
yes.
Brian Armstrong, yes. I was thinking of Brian Johnson, the other guy who's the health nut.
That's right.
Yeah, okay. What about for the Treasury Company itself? Like, how do you guys think about that infrastructure fitting into, the compliant and scalable institutional adoption? Kind of going back to the points that you guys were making in the beginning, right? Like, what is the ultimate vision here from the first couple innings to, we're moving from this pilot phase into actual implementation, right? And so where do you guys fall into that bucket?
Yeah. Well, again, we've touched on how Avalanche was really built for institutions. It's not something being retrofitted. It's really built for institutions who want to start with compliance at the forefront. And I think if you look at how product organizations have changed over the last decade, compliance used to be viewed as a cost center or a final sign-off and an afterthought. Yeah. Whereas now compliance is really at the forefront of how people approach adopting a new technology or designing a new product. Compliance, helps create the guardrails, protect everybody. So the fact that Avalanche was built with that in mind and having that just at the forefront allows institutions to think further down the road and how they're going to continue to build on it and scale on it. Some of the conversations we've been having have obviously been about that phase 1 walled garden that we've talked about that people are familiar with. Yeah. But then also, what is phase 2? What does phase 3 look like? How does this continue to be a compliant technology throughout, moving all of our infrastructure to this for the next 30 plus years?
Yeah. What would you say is kind of the importance of the DAT structure right now as this new capital layer? What kind of role does it play given the way the market is going today? I would still argue we're in a bear market, right?
I think that's fair.
Yeah,
Again,
okay. Some people, speaking of optimists,
if you talk to
realist,
certainly if you talk to crypto native people.
Yeah. Okay, but why are they becoming increasingly more relevant now than ever, having this DAT structure as a capital layer?
Well, so even if Clarity goes through, right, there's almost zero chance that a bank is going to be able to hold spot crypto on their balance sheets in 2026 and probably well into 2027. So the ability to get Clarity through just allows all of this infrastructure that's going to take 18, 24 months to implement. So at the outset, if you want to get regulated exposure and you are a small institution or you are an asset manager or a high net worth individual and you want to do it in a regulated format, and you want to kind of own this asset not in spot, well then AVAT fills that void. Mm-hmm. And then the concept of this is to continue to invest into the ecosystem, and whether that is outright building companies, owning companies, investing in, acquiring companies that are operating businesses. I think there's a lot of businesses, in crypto world, you get these huge headlines, right? Where you this huge global bank is implementing blockchain, and this specific blockchain, and it used to be that now the world's kind of gotten hip to it. It used to be that that spot market would go. Now it's just now,
headline.
Yeah.
Oh, nice.
People understand. Sometimes people put things out there just for the headline.
Yeah, that is true.
But so I think what is more valuable is going to companies that are growing, year over year in the high double digits. They have, $50 million in top line revenue, maybe $10 million to EBITDA, and they are a financial services company that relies on interchange or interstate commerce or particularly commerce between different countries. And implementing blockchain technology would give them incredible advantage. Just kind of speed, execution, cost. And so one of the things that that we are looking at after we are up and listed, which we're hoping to happen fairly soon, is looking at opportunities in that space and what are some businesses that we can invest in or acquire or build that would be complementary to each other, that would serve as a great example, test case, if you will, of like real companies that are running their businesses on Avalanche and then utilizing that to win in a competitive landscape. And I think that has been, we have a lot of conceptual thoughts. We have to kind of wait till we get up and running to maybe execute on some of those. But I think that's going to be a big opportunity for any one of these L1 chains, not just our strategy at AVAT, but is going out and getting rank and file businesses to understand how they can implement this technology. It's in a way that's not a technological burden, in a way that they can understand that it is going to provide them an advantage and then ultimately helps them scale and make more revenue.
Mm-hmm. And by acquiring these businesses, it's providing exposure to investors, essentially, to that market within the market that we were kind of talking about earlier, right? Yeah. When you're like, oh, you can't get access to Stripe right now, or these other companies that aren't public.
Well, even like, I touched on Amazon earlier and how I bought it back in 2000s. And even AWS, when you started hearing more and more about the cloud and people building on the cloud, you could own Amazon, but you couldn't really invest in AWS and the businesses building on AWS. So even if you knew people were exploring this technology, adopting this technology, and you knew it was going to change how businesses functioned, the everyday person could not do anything about that and could not, put money behind their conviction or anything. And so with, that's what we're hoping to provide so that people can get the exposure to the whole ecosystem growth as opposed to just the underlying technology.
Yes. Okay. This all makes sense. And then maybe to wrap things up here, what is something that you guys are watching right now that you think other people should pay attention to that we didn't already discuss?
Yeah, I mean, the Clarity Act and tokenization of equities in the United States, I think, is like a seismic shift. And so that, obviously, we touched on that. I think just seeing real world adoption, I think that you see these deals that are announced, and it's Western Union announced one with Solana last week, and then in a lot of these cases over the last couple of years you have these deals and then you don't really see any real traction that forms from that. My sense is, irrespective of Clarity, you're going to start seeing traction in the third and fourth quarter of this year. And that'll give you an insight on like what is the verticals that will be next. So obviously they're like very well established that stablecoins are going to work, and you're seeing like real commerce and like real encroachment. You see Visa and MasterCard, Stripe, all kind of like reacting. So you're looking to see kind of like, if you want to see what the next vertical is, you're going to look in the third and fourth quarter and be like, okay, what are some other financial firms not in the payment space or non-financial firms that are doing things tangible with actual economic value on blockchains? And if you see one or two of them, you can kind of make a bet that if you're trying to like look out of where the next thing is, like whatever that industry is, it's copycat world, right? So as soon as one or two firms start implementing that and have success, you'll see other names in that space go in there, and then you'll kind of have a sense, okay, here's a new vertical for blockchain adoption that I should be paying attention to.
And I think people aren't necessarily paying enough attention to how does this technology survive long term. Again, some people are still checking the box. Yeah. Some people are saying, okay, I'm using a blockchain without actually verifying if it's a real blockchain. And I think what we're going to see in probably 3 to 5 years is people understanding that you need to have verifiability, you need to have actual neutrality, you need to have optional privacy, and I think I don't think people are paying enough attention to that in the market and truly understanding not just the technology and sales today, but what am I going to do in 5, 10, 20 years to continue to leverage this?
Yeah, make sure the technology lasts.
Yes.
I don't think
migration is the most miserable thing to go through, worse than childbirth, which I can say as a mother.
Yeah. I don't know that we can get through a discussion in crypto in May of 2026 without talking about agentic payments. Sorry. For all those who are probably tired.
We will let you have this.
We have to pretend like we care about agentic payments now in crypto. It's very clear that AI is like the most transformational technology like since maybe like the internet or the steam engine. You can maybe argue that it has the potential to be more impactful from that. That is going to shape everything. It's not going to shape crypto. And some people in crypto think that it will help shape AI, and I think the jury's still out on that. You're going to have all of these bots. You're going to have agentic payments. Are they going to do those agentic payments on Visa and MasterCard? Or are they going to do that on Bitcoin or Avalanche? I think that is a debate that is going to rage on, and so I think that's something to kind of keep an eye on. I think it's interesting how AI is polling just so bad in America right now. I think everyone saw a couple of the graduation speeches this week.
They were. I saw that.
It was pretty bleak out there. 22-year-olds do not like AI who are graduating with a college degree, and so
no jobs.
I think
AI taking their jobs. Yeah.
I'm shocked the writers didn't quickly edit what people were going to say after the first 2 or 3 booings.
Yeah. But I think that there is a trend there, and I don't know if it's good or bad, but that's definitely something that anybody who's interested about investing or just understanding the crypto space right now is just like the AI shift is so huge, and it month to month there's just like massive changes as each model comes out with a new update. So like there is this point where like there could be an update or could be a shift that like very positively or potentially negatively affects crypto, and so like that's something that everyone should be kind of paying attention to.
Yeah. Last thing, maybe building off of this, can you leave us with a piece of advice, something that you two have carried with yourselves throughout your careers?
Yeah, I mean, I think whatever little bit of success I've had in my career, I kind of attribute to like the very well quoted and probably overquoted Wayne Gretzky line of like, you skate to where the puck is going and not to where the puck is. And I think that, do kind of the points about looking at what the next vertical is in crypto, or what the impact is, good or bad, of AI on crypto. I think that the thing that we're always trying to think about is like what's happening 6 months from now, and when things happen that are meaningful, you try to like kind of draw back to like what was the origin of that, and is it repeatable? Is this a trend? And like what implementations or implications this has, for in the things in the near future. And so that's, I think, in this space, because it is still so early. Like I think firms have, they all have a digital asset strategy, but like as far as like implementation and like adaptation and like what that actually translates to, it's very early. And so I think just understanding and seeing where there's like little kind of like roots of like grass sprouting, and then trying to understand like how do you get into that. So.
Yeah. And I feel like I always focus a little bit more on how do I figure this out and help others figure it out, and then how do we move towards delivery? And I feel like we, really are continuing to work on that now, which is exciting to see. First, it was how do we get people to accept principal trading firms into these markets? Historically, they weren't. And then how do we get institutions actually trading crypto? And now it's how do we get institutions, changing their infrastructure to this new technology? And I just always like to figure things out and help people get things over the line.
Amazing. I love it. Well, Laine, Bart, thank you so much for coming on today.
Appreciate it.
Thanks for having us.
Yeah.